Joni, first to you, your thoughts on this.
Yeah, you know, I'm actually surprised that the report is not stronger. We were expecting better numbers, not just in that headline number, but I expected to see more movement in wages. I will say August is notoriously underreported. We could come back next month and have a revision. That is possible. But this is a disappointing report. We did not see much movement in labor participation. More people are not entering and participating in the workforce. That's a concern.
This is near a 40-year low.
Yes.
This is just off the 40-year low.
And it's not improving. I think that, you know, when you look at, there's 94 million people that are just deciding, I'm not going to participate. A lot of that is women, but it's also millennials at home. It's, you know, some of it, people will say, yes, baby boomers have maybe retired early, but it's across the board. It's all sectors. So labor participation is a challenge, and certainly, I think, not seeing the job growth in manufacturing and construction, I mean, two negatives there is certainly, you know, a concern that is not a good sign for the economy.
Joni,
yeah, go ahead.
one thing that's interesting is that, and a little bit depressing, the Conference Board recently asked a question they asked all the time, which is, are jobs plentiful? And that number hit a high since back in early this millennium, which suggests everyone says, yeah, there are jobs out there, but I don't want one. So that maybe job force participation simply is not going to increase.
Yeah, I think that's a problem. And I think wages is really holding that back. Because if people felt like, well, you know, maybe I could go out and get that job and make more money, maybe they would kind of get off the couch and come back into the workforce. But it hasn't been enough. And we talked about consumer price index before. The prices are increasing, but people don't feel like they can enter the workforce and make more money. It's almost not worth it for them. We have to have a correction in wages to really start to see this economy improve. That's what's going to drive this.
Steve Moore, I look at this report, and it's indicative of the malaise that kind of has set in, not just in the last year, but just during the recovery from the recession in 08, 09. The labor, again, you have, 94 million people, as Joni pointed out, who just don't want to participate in the labor force, near a 40-year low. The U6, which is, I know you'll agree, captures unemployment much better, 9.7%, still near double digits, year-over-year earnings growing at 2.4%. That is a slowdown from last month, where it was 2.6%. It looked like we were getting a little bit of heat there, but again, a cooling in wage growth.
Yeah, you know, this is a ho-hum report, very unexciting. When I was in college, we used to call something like the sister kissing, you know, because there's nothing much to get excited about here. But I would follow up on what Joni said. You know, I agree with you, Joni. The two things I'm most distressed about is this reduction in construction and manufacturing jobs, because, you know, this is what the whole election is really about. Where are the good jobs for middle-class, working-class people? And those are typically the jobs that pay, you know, $30 or $40 an hour, those manufacturing jobs. I'll give you an amazing statistic that just came out recently related to this. Since the recession started back in late 2007, Dagan, we've lost 1.5 million manufacturing jobs in this country, and they're not coming back. One other quick thing, the bright spot in the economy has been housing, right? And yet, if there's housing, you'd think there'd be construction jobs. Where are they?
Yeah, exactly. Construction lost jobs. Jonathan, let's take a quick look at these markets. We've seen a pop in the futures, 59-point gain on the Dow futures, a big move to the upside in oil and in gold. If we can show what gold is doing right now, oil up almost $1 a barrel. It was up about half a buck a barrel earlier, and gold shooting up as well. Explain this.
Well, it's to me, Dagan, almost reads like a little bit of a relief rally. I mean, these are markets that had been down quite sharply in advance of the number. And as pointed out, I mean, this is almost so much of a ho-hum number. Traders seem to be just shrugging their shoulders at this point. But as we always point out, you know, one sparrow does not make a spring. It's not a number that necessarily determines the course of the economy. And I take a bigger picture look out. By the time the Fed realizes how much inflation they've created, I think it'll be too late for investors to protect themselves. So don't read too much into one number. Take a step back. Look at the big picture of the economy.
Inflation rears its ugly head. If you own longer-term treasuries at a 1.5% yield, that's going to be a scary, scary day.
To Jonathan's point, we should always, when looking at these jobs numbers, not look at a single number, but at the very least look at the 3-month moving average, which right now, as of today's number, would be 232,000, which is about par for the course. On gold, Dagan, I think what's going on is the market is saying there is not going to be a September rate increase, and when gold bugs hear that the Fed is not moving, that inflation is on the way, they bid up the price of gold. So that's why you're seeing that number.
That's their excuse of the day, because it's either a haven or
exactly.
it saves you from inflation, whatever, It's wedding season in India. That's another reason that they give. Jack, your take on the jobs report.
It's not surprising to see such an increase in leisure and hospitality. In my opinion, with wages coming down. I mean, a lot of people want to go out and get those jobs to get tips and other extra income. And, this economy, it's an interesting time right now going into the election. Obviously, don't see any type of Fed hike coming around anytime too soon. Actually, I don't even think we'll see one this year. But, hopefully we can see a little bump in wages, because I think that's the most telling story about this entire report.
If you're in politics, how do you play this?
Well, this is, okay, so I'm a millennial, right? And I think about how this impacts my generation. And don't, just write us off, because there's more than 83 million millennials, right? And a lot of employers and people in business have been waiting for millennials to grow up. They're grown up. They're at the time when they're supposed to be making decisions, buying homes, starting families, all these kinds of things which play into the economy. And if they are the ones sitting down, not participating in the economy, or they're the ones who aren't getting, their wages increase, that aren't feeling like they're able to participate, they're going to feel like the economy is not doing well. It's going to affect how they vote. It's going to affect how they participate in the marketplace. And honestly, it's not going to be good. We have to start looking at how millennials play into this economy and making sure that they can get good jobs, feel like they can stay in a company, right? They're not going to leave. They can't afford to leave, and really start treating them as, an ownership in this economy.